Well, today's snowflakes on Wall Street could give way to tomorrow and a flurry of interest rate hikes. Federal Reserve policymakers began their two-day meeting today. Tomorrow, they will issue their decision on rates. And given the recent upbeat economic data, many expect the central bank to hike rates for only the third time in the past decade. Steve Liesman surveyed economists, money managers, and strategists to get their outlook for the economy, rates, and the stock market.
At the beginning of 2016, the Fed forecast 4 rate increases. It ended up hiking just once. Now it's projecting 3 rate hikes, and the question is the forecast any better this time? And the answer may be maybe. One difference between now and then, the market this time actually believes the Fed. The CNBC Fed survey shows 60% of respondents think the Fed will hike 3 times in 2017. Another 25% think there could be as many as 4 rate hikes. And rather than fighting the markets, this time the Fed will just be going along with what the market already believes.
If you look back at the last 2 big rate cycles, the key is that they have to move in line with market expectations. If that happens, the market can continue to do well. So I think they will be tempered in their language. They will indicate continued slow but steady interest rate increases, but that's alongside better economic growth. So I don't expect this to be a headwind for the stock market.
All of the survey's 50 respondents, who include economists, money managers, and strategists, think the Fed will hike at its March meeting, and most see another rate hike coming again in June.
Clearly, we're going to see a quarter-point increase tomorrow. I think that's been well telegraphed by both the hawks and the doves on the Fed. But I think the real issue is going to be the commentary afterward. How hawkish is that?
Survey respondents are generally upbeat about the president's economic agenda, giving high marks to deregulation and tax cuts for businesses and individuals. But they seriously dislike what they hear of the president's trade agenda. Most think the controversial border adjustment tax is negative for economic growth. Meanwhile, 64% think the stock market is too optimistic about the president's agenda. They've marked up their growth forecast by just 0.2% for 2017 and 0.4 for 2018. That's a far cry from the 1 or 2 full percentage points that the administration thinks its reforms can deliver. For Nightly Business Report, I'm Steve Liesman in Washington.